I tried every investment strategy out there, from real estate to Bitcoin, and put them to the test. After digging into the numbers and weighing the pros and cons, I've found the one investment strategy that stands above the rest. Curious to know which one it is. We've all wondered at some point, with so many investment options out there, which one actually works the best. Is it real estate, with its steady cash flow? Or maybe Bitcoin, with its huge growth potential? What about dividend stocks, growth stocks, or even trading options? Well, I decided to find out. I put every major investment strategy to the test, comparing each one based on key factors like risk, potential growth, income, ease of management, and long-term stability. Today, I'm going to share the results of this journey and reveal which strategy came out on top. This video will give you a clear picture of how each strategy stacks up. By the end, you'll know which one could be the best fit for you. So if you're ready to dive in and find out the ultimate investment strategy, let's get started. Chapter 1. Criteria for Comparison. To find the best investment strategy, I needed a fair way to evaluate each option. So I set up 5 main criteria that would give us a well-rounded view of each strategy's strengths and weaknesses. First up is risk level. How much risk are you taking on with each strategy? And how stable is it during market ups and downs? Next is growth potential, where we look at the chances for significant returns over time. Then there's income generation. Does this strategy create a steady flow of cash, or is it more focused on growth? I also looked at ease of management. Some investments require constant attention, while others let you take a hands-off approach. And finally, there's long-term stability. How likely is this strategy to stand the test of time? By scoring each investment on these points, we'll get a clear picture of which strategy is truly the winner. Let's get started with real estate. Chapter 2. Real estate investment. Real estate is often seen as a safe, tangible investment. But let's break it down based on our criteria to see how it truly holds up. Starting with risk level, real estate is generally considered stable, especially when you hold on to properties over time. However, market downturns can impact property values, so it's not entirely risk-free. In terms of growth potential, real estate has historically shown steady appreciation. And with leverage, using a mortgage to buy a property, you can amplify your returns by controlling a valuable asset with less of your own money. For income generation, real estate shines. Rental properties can provide a consistent stream of income, and you can adjust rent over time to keep up with inflation. This makes real estate an attractive choice for those looking to earn regular cash flow. When it comes to ease of management, real estate can be a bit demanding. You have to handle maintenance, tenant issues, or the costs of property management. It's not a completely passive investment, but some investors find the hands-on approach rewarding. Lastly, long-term stability. Real estate has a proven track record of maintaining and growing value over decades. It's a solid option for those who want stability and potential for wealth building over time. Chapter 3. Options Trading. Options trading is a bit more complex, but it offers some unique advantages for those willing to dive into it. Let's see how it stacks up across our criteria. Risk level is high with options trading. You're dealing with contracts that can quickly lose value, so this strategy isn't for the faint of heart. However, with proper risk management, like using stop-loss orders, you can limit potential losses. When it comes to growth potential, options trading can deliver big returns in a short time. Since options allow you to control a large number of shares with a smaller investment, you can profit from price swings without having to buy the actual stock. This leverage makes it possible to multiply gains, but it can also magnify losses. For income generation, options offer strategies like covered calls, which can provide a steady income stream. However, these techniques require a solid understanding of the market and can be risky without experience. Ease of management is where options trading falls short. It requires daily attention, technical skills, and constant learning. It's not as straightforward as buying and holding stocks, and it can feel like a full-time job. Finally, in terms of long-term stability, options trading is challenging. The high-risk, high-reward nature makes it hard to rely on as a long-term investment without deep knowledge and consistent practice. Chapter 4. Bitcoin as a digital asset. Bitcoin has taken the investment world by storm. But is it the ultimate strategy? Let's look at how it performs across our criteria. First, risk level. Bitcoin is known for its volatility. Prices can skyrocket, but they can also drop just as fast. There are also regulatory risks to consider, as governments around the world continue to debate how to handle cryptocurrencies. In terms of growth potential, Bitcoin is one of the highest. Since its inception, it has delivered impressive returns, and as a digital asset, it's seen by some as the gold of the internet age. For those willing to accept the risks, the rewards can be substantial. When it comes to income generation, Bitcoin doesn't inherently provide cash flow. However, some investors earn returns through staking or lending their Bitcoin on certain platforms, though this carries its own set of risks. For ease of management, Bitcoin can be straightforward once you're set up. However, you need to consider secure storage and be cautious of cyber threats. Managing Bitcoin isn't overly time-consuming, but it requires vigilance. Lastly, long-term stability is uncertain. As a relatively new asset, Bitcoin's long-term role is still evolving. However, its decentralized nature and fixed supply give it potential as a lasting store of value, especially in a world of rising digital adoption. Chapter 5. Dividend Stocks. Dividend stocks are a go-to for many investors looking for steady income. Let's break down how they measure up in each category. Starting with risk level, dividend stocks are generally lower risk, especially if you choose established companies with a history of paying dividends. These companies often have stable earnings and are less volatile than growth stocks or cryptocurrencies. Growth potential with dividend stocks might not be as high as with other investments, but it's consistent. While you won't see rapid gains, reinvesting dividends can compound returns over time, gradually building wealth. For income generation, dividend stocks shine. You receive regular payments, usually every quarter, just for holding onto your shares. This makes them ideal for investors seeking passive income, as you don't need to sell your shares to benefit from your investment. In terms of ease of management, dividend stocks are relatively hands-off. Once you've chosen reliable companies, you can hold them long-term, enjoying the income without needing to constantly monitor the market. Lastly, long-term stability is one of dividend stocks' biggest strengths. Many companies have paid dividends for decades, weathering market ups and downs. This makes them a solid choice for those looking to create a stable, multi-generational investment portfolio. Chapter 6. Growth Stocks. Growth stocks are all about potential, specifically the potential for rapid expansion and significant returns. Let's explore how they rank according to our criteria. Starting with risk level, growth stocks are usually more volatile. These companies often reinvest profits into expansion rather than paying dividends, which can make their stock prices fluctuate more than stable, established companies. This means you're taking on a higher risk with the hope of seeing big rewards. In terms of growth potential, growth stocks are hard to beat. Companies in sectors like technology, renewable energy, or biotech often see explosive growth, especially if they become industry leaders. While there is no guarantee, the upside can be substantial if you pick the right stocks. For income generation, growth stocks generally don't pay dividends. Instead, they focus on reinvesting profits to fuel further growth. If you're looking for regular income, this might not be the best fit. Ease of management can be moderate with growth stocks. While you don't have to trade frequently, it's important to stay informed about the companies and industries you've invested in. Keeping up with trends and earning reports can help you make informed decisions. Finally, long-term stability is mixed. Growth stocks can deliver outstanding returns over time, but they're also vulnerable to market shifts. Some companies will thrive, while others might struggle. So it's crucial to do your research and be prepared for volatility. Chapter 7. Index Funds and ETFs. Index funds and ETFs are often called the set it and forget it of investing. Let's see how they perform based on our criteria. Starting with risk level, index funds and ETFs are generally low risk. They spread your investments across a wide range of assets, which helps balance out the impact of any single stock's ups and downs. This makes them a popular choice for those looking for stability. Growth potential is steady with index funds and ETFs. While they may not provide the rapid gains of individual stocks, they typically follow the overall market trend. Over time, major indexes like the S&P 500 have delivered consistent growth, which makes these funds ideal for long-term investors. For income generation, many index funds and ETFs pay dividends. This allows you to earn passive income while your investment grows, especially if you reinvest those dividends back into the fund. When it comes to ease of management, index funds and ETFs are incredibly low maintenance. You don't have to worry about picking individual stocks or constantly monitoring the market. Just invest, sit back, and let the fund do the work. Lastly, long-term stability is where index funds and ETFs truly shine. With their broad diversification and steady performance, they provide a solid foundation for building wealth over time. For investors looking for a reliable hands-off approach, index funds and ETFs are hard to beat. Chapter 8. Declaring a Winner. We've explored 6 popular investment strategies: real estate, options trading, Bitcoin, dividend stocks, growth stocks, and index funds. Each one has unique strengths, but which one stands out as the ultimate winner? Based on our criteria, index fund and ETFs take the top spot. They offer low risk, steady growth, and regular income through dividends. Plus, they're easy to manage and provide long-term stability, making them ideal for both beginners and experienced investors. While options trading and growth stocks offer high rewards, they come with significant risks. Real estate and dividend stocks provide stable income, but require more hands-on management. Bitcoin has incredible growth potential, but it's highly volatile. Ultimately, index funds and ETFs strike a balance across all areas, making them a versatile, reliable choice for long-term investing. If I had to choose just one strategy, it'd be index funds and ETFs, hands down. So, there you have it. The investment strategies tested, compared, and a winner revealed. Now, I'd love to hear from you. Which investment strategy do you think is the best? Or which one has worked for you? Share your thoughts in the comments below. If you found this video helpful, don't forget to like, subscribe, and hit that notification bell so you don't miss our future content. I'm always here to help you make smarter financial choices. Thanks for watching, and remember, no matter your choice, investing is all about building a future you're excited about.